So continents, Americas, Africa, Asia, Pacific, Europe, and Middle East. First of all, I hope you're all safe and as safe as possible, as well as your family, friends, and colleagues. And I suggest we have a thought for all those suffering from this situation nowadays. We're together today to look at the brand new World FinTech Report 2020. It's the 4th edition. Originally, the report was to be presented during our Efma Bank plus FinTech conference due this week in Berlin, but a very small thing changed our big plans. So here we are. Before starting, I just want to insist on the fact that Efma, the biggest banks association worldwide with 3,300 institutions from 130 countries, is there to support the community of financial institutions. So I invite you to get to efma.com to look at the specific insights, news, and webinars which we produce in those hard times to help you. Now, 3 quick housekeeping points before we start. First of all, as you might have noticed, the microphones of participants are muted for the whole webinar. But via our chat box, you can make a comment or raise a question that will feed our interactions with the different speakers in every Q&A session. The session is recorded and will be made available later on the web to be replayed. So what is the agenda that we have today for you? If we can have the agenda on the screen. We'll have Elias Ganem, Global Head of Market Intelligence from Capgemini Financial Services, giving us the key findings from the new brand report. Then we'll look at BBV and Uber case study out of Latin America, and a very nice collaboration that will be explained to you. And then we will also be looking, at 2 different point of views from Colin Payne and Sudhir Pai, both from Capgemini. They will give us some perspectives to look at when thinking about fintech and retail financial services and collaboration. I think we're all set, so I would like to introduce you, as said earlier, to Elias Ganem. And Elias, I would say simply, the floor is yours.
Thank you so much, Philippe. Thank you for Efma for welcoming us here today, and thank you all for joining us. Today is a very important day, not only because we are presenting the World FinTech Report, but the FinTech Report comes at a moment that is very acute, as everybody has shifted to a single channel, which is a digital channel. And today we will be talking about how the digital channel is becoming so important to the consumer. So, as Philippe mentioned, today is our 4th edition. We started 3 years ago by saying FinTech is not a fashion, FinTech is important and here to stay, and we will see what is happening since then. 50 executives from banks has been interviewed. We did interviews across 30 markets. We will be sharing with you an offering at the end. And more important, we interviewed 60 banks around the OpenX Readiness Index that we will be sharing with you. We have quotes from a lot of very important people around the world, from HSBC, from BBVA, from BNP Paribas, as well as from Nordnet from Sweden, as well as startups. And what is very important is to discuss about the main topic, which is from disruption to maturity. So without further ado, the 3 key messages that we would like people to remember from that is the most important part is it's important, it's essential, it's urgent to collaborate at scale with FinTech. The first important message is we've been seeing the banks acting for the last few years into the innovation, but we have a message of alert. Banks must board the last train to relevancy. We call it the OpenX Express, and we'll come to the OpenX. And surviving today in today's economy, and today even more with the COVID situation, will require to be able to leverage FinTech across the entire value chain. Talking about value chain, it's not only the last mile that is important. While the last mile is important, the front is important, it's behind the scene that the game is being played. So behind the scene, the middle and back office need also to be reshaped to have the right customer perception. So what is the key message that we want to say? It's essential to act now. It's essential to act together, but it's more essential to act at scale. We need to be out of the POC, we need to be into the real business and collaborate at scale towards an industrialized innovation. You can't do it just for the sake of doing it. You need to do it in a very structured approach. So the conclusion is, once disruptors, the non-traditional players have significantly matured, and banks need to capitalize on the opportunity with the fintech as catalyst. Now, we can't start any conversation as you'll be doing today without bringing the COVID. So let's bring it. There is a major COVID dilemma happening today. First, the pandemic is changing the customer behavior while impacting the bank profitability. If we are today over a screen, it's because we can't to be face to face. And this situation, everybody is seeing it. The digital channel adoption is completely off the charts. 82% of the customers are telling us they don't want to visit a branch. One of the two customers is saying, you know what, even after COVID, I might not go to a branch for a big transaction as as a loan. The using digital channel is skyrocketing as we speak and will probably remain high after. And even today, to be able to talk to a bank or to an insurance company, unfortunately, the customer services are completely overwhelmed, and more voice assistants and chatbots are becoming the way of going forward. But what is the situation on the other side? 58% of the banks still have digital journey broken that require at some time a physical interaction. We've all went through the, oh wow, amazing experience online, but please drop by my branch so you could sign the contract. And one of three customers is telling us, we survey them right now, the last 2 weeks, 36% of the consumer are reporting a better experience by switching to an alternative banking provider in current environment. And they will probably continuing that after the crisis. So what is the situation today? There is a huge pressure on the banks. There is a huge pressure on the revenue, and are fintech the right solution? So there is here clearly, we are referring to a vicious cycle. On one side, in a certain environment, tendency of corporate is to reduce investment. We all know that. But on the other side, banks need to scale their business and their offering, either by investing, but we see that it will be difficult, or by partnering. Finally, the fintech can offer this solution, but fintech today need cash. We've seen all over the place how difficult for them is to raise money today. So this is a vicious cycle. Let's turn it a virtuous cycle together by collaborating at scale. So banks must board the last train to relevancy. We call it the OpenX Express. And I love the way we're starting it. It's, hello, customer, I can't hear you. When we ask consumers, we ask them, are the traditional banks serving you as much as the new age players? And we ask them, well, 16% of all the customers said that their primary bank has a narrow range of product and services that does not exactly match the needs of the consumers and is not well integrated with other platforms. 16% of every customers. 26% of the new age customer are saying that. And out of the 26, half of them are likely to switch to another bank in the next 12 months. And where would they switch? Well, they would probably switch to non-traditional. Why? Because non-traditional has much lower cost. They have much easiest to use. Their service is much better. The features are much more hyper-personalized, and everything is very adapted to the consumer. So basically, what are we seeing today? We are seeing that the new players has huge capabilities that are making them different and making them more relevant to the consumer. It starts by everything is mobile, everything is customer-centric, data is at the heart of everything they do. Everything is an open platform, so it's very easy to plug in, plug out anything else. Effective collaboration is in the DNA of any fintech, or even big tech, and they have a very agile approach to everything they do. And as you could see here, they are really in the reality of growing. And now let's put some numbers behind what I'm saying here. Let's look at two challenger banks that many of us has been using either before or even now during the crisis. Revolut from the UK and 26 for Germany. And the numbers are just astonishing. The revenue between 2017 and 2018 for Revolut, 360% year-on-year growth. I'm sure any one of you would love to have this kind of numbers in your business. Customer base doubled. Expansion, all Europe, Singapore, Japan, US. If we look at N26, 3.5 million users in 24 European markets, 16 million transactions per month, and as well reaching the rest of the world. But it's not only the challenger bank that are coming here. The big tech are quite aggressive. We could see how Ant Financial is coming very solid, as well as Amazon is turning more and more financial players, when you can just have to see that Amazon Pay doubled the transaction since 2015. And even Goldman Sachs and BBVA are today in discussions, and they announced it, to sell some of their products through Amazon. So what is the situation? The situation is about moving to OpenX. What is OpenX? OpenX is really a seamless exchange of data. Make it fast, make it simple, make it easy, and resources, which compounded by an expedite product innovation, create the best experience. And by the way, when say X, X for experience. What is the situation? 4 paradigms have changed in the last few years. We went from a product mindset to an experience mindset. We went from a heavy asset-driven business to data. We went from ownership to shared, to make sure that we can easily have the access to everything. And the conclusion is we went from a partnership, from a build and buy to a partnership model. That is the OpenX. And as a consequence, the message that we want to say to the bank, it's time to move from a universal bank where you produce everything, internal production, and you distribute everything, to more specialized roles, where either you become a supplier, where you produce and others distribute, an aggregator, you distribute somebody else's product, or an orchestrator, where you create an ecosystem. We see much more the Amazon of the world playing into the orchestrator role. So the message here is leverage your strengths into the collaboration going forward. So customer experience is not only about the last mile. Very important that if you want to offer the last mile, make sure that the back office is adapted. When we look at what's the situation today between front, middle, and back, clearly the investment is on the front. The experience is becoming much more agile, much more AI-driven, much more experimental, etc. But when we look into the back, the middle, and the back office, unfortunately, it remains heavily paper-based, heavily manual process. We try to find out where is the investment in IT. And the good news is the investment in IT is growing 4% more between 2016 and 2019. And even better, the new IT is jumping from 24 to 33. That's great. But, well, unfortunately, the consumer is not seeing it. And it's remaining yet to be improved when it comes to the consumer, as you could see here. So it's more than time to act. Act now, act together at scale. And the first message that we want to say is, to act, you need to collaborate at scale. We have defined this OpenX Readiness Index, which is a way to measure the bank's readiness to collaborate at scale. By that, we have found that collaboration requires 4 components: the right teams to collaborate, the right business mindset to collaborate, the right platform to accept the collaboration, and the right willing to invest and test the solution. And then we studied there are 4 steps towards collaborative innovation. First, open innovation, meet the people. The second one, evaluate the best partner you want to work with. Third one is adopt them, the acculturation of working together. And the last one is industrialization. innovate at scale. And the beauty of it is we interviewed 60 banks around the world, and voila, this is where it stands as of today. If we look at this chart on the right, and we look at the x-axis, which is the readiness to collaborate, and at the y-axis is the success of collaboration, top right, the North Star, are the few banks in the world that are collaborating at scale and are able to implement new solutions from startups and at scale. Most of them, unfortunately, remains today neither not ready or not collaborating at scale. And as you could see here, it's coming across America, Europe, and Asia, and Middle East, of course. So what is the challenge here? The challenge is collaborating at scale required to have the right tools. And what we want banks to do is prioritize, choose the right partner, industrialize the innovation. Why? Because we want to move from an open innovation mindset that delivers only proof of concept to an applied innovation mindset, where an inventive bank that selected the right role that they want to play work with scale-ups, which are the mature startup, and deliver industrialized innovation at scale. So to conclude today where we are, well, the first key message, I think you would got it already by now, is on board with the open X. Consumer expect, consumer demand, consumer are getting a lot these days. Big tech and cherished banks are doing it probably today much better than our traditional banks. So to catch up, incumbent must become inventive bank, leverage fintech across all the value chain, and choose the right value they bring to the new equation. And please look beyond the front end. An engaging front end requires a robust and enabling back end. You need to map and prioritize all the experience and prioritize the right that will make the major difference. And finally, please collaborate at scale. Create an effective collaboration mindset. You need the right people, the right business, the right process. The time has come. The time was already coming. COVID makes it even more urgent. With the uncertain time that we are going through, it's important to industrialize the innovation and collaborate at scale with the ecosystem outside. That's basically the conclusions of our FinTech Report 2020. Thank you so much for listening to us.
Thank you, Elias. And if we were together physically, we would give you a round of applause, but let's do it virtually. And also, I know it's not been easy because while finalizing the report, the crisis came and you had, of course, to reconsider a number of features. We have many questions, and one of those is, which struck me a lot, is that we hear many predictions, saying that the crisis will have an avian long-term impact as well, for example, on digitization. So my question, which relates a lot to your virtuous circle, which I might even call a virtual circle, is will the actual crisis slow down the predicted increase of bank plus fintech collaboration at scale, or will it, on the contrary, speed up?
Well, it's like anyone that is on TV today, where they have plenty of predictions. I will not give you a prediction. I will just give you a few facts. Is today banks need to create a better experience. The study that we have done recently have shown that the digital channel has become the main channel. Branches, well, maybe people will get quite bored in a branch for the next few days because they might not see anyone. So I don't know if that will accelerate or not, but what I hope is it will accelerate. It is essential to collaborate at scale. And on the other side, well, a lot of fintech will go through tough times in the coming days because projects are being delayed, investment is being delayed. So a message to the banks, don't delay any project that you have with fintech. They need your money and they need your customers to engage with, and they need to help you to have a better experience to the end consumer.
Thank you. Maybe a second and final one, as we are just right in timing for that. I like very much your point about the middle office and the back office in the bank, because often, obviously, we talk about customer experience, front office. Those are the discussion for every day. But often when we see banks improving the experience on the front office, they sometimes forget the full chain, as you call it, the digital journey broken. So how can you cope with, making sure that you review everything needed on mid and back office side just to give that smooth experience?
It is so essential. I'm going to give you a personal experience here. Let me share it here with the full audience. Well, as you know, the rates are quite down, and as such, I was refinancing a loan, a mortgage that I have. And everything started very well in January. By February, we had agreed on all the conditions, and by early March, we agreed to go ahead. And that's where the banker told me, hey, no worries, we are sending you by mail the contract. Please sign it, return it, and in the next few months we will execute it. And I am still paying the high interest rate. For me, this is the best example or the worst example of a middle and back office. If that would have been organized, I would have gone through the end-to-end in a digital experience. So it's very important for the banks to look backward and say, in the message I say to my consumer, I invite him to start all the relationship online, but is he able to do it end-to-end, and why? And then prioritize the challenges that worth changing immediately.
Yeah, makes sense. Thank you. I think we'll keep all the other one for offline session, offline reply later. So Elias, the floor is yours for the next.
Thank you so much. Thank you very much, Philippe. And now I think it's my great honor to invite to welcome Uber and BBVA, who will be telling us what is really happening in the market. It's not only about us telling it about it, but it's really listening to what the market. Carlos and Juan Carlos, thank you so much for joining us, and the floor is yours, please.
Thank you, Elias.
Perfect. Thank you, Elias. Can we move to the next slide, please? Hello, everyone. Well, good morning from Mexico. This is just to set some context on the relevance of Uber in Mexico. Just to put it in perspective, Mexico is the fourth largest country for Uber globally, almost a third. Brazil is the first one, which makes Latin America the largest and most relevant in terms of trips, number of users, and number of what we call earners, which are basically our driver partners, couriers, and restaurants, the #1 region for the platform. And specifically about Mexico, we have 150,000 monthly active drivers. If you add to that more or less 50,000 monthly active couriers from Uber Eats, we are close to 300,000 monthly active earners, drivers plus couriers. And I make that distinction because actually the product that we launched with BBVA goes for both drivers and couriers. We know this segment pretty well, and I think in terms of just financial inclusion of this group, as you can see there, 60% have a debit card, only 4% have a credit card, which means 40% actually, a big portion of this group don't have any product, they don't have any financial product. Something that might shock people in some countries, almost 40%, 38% of drivers get their first savings accounts whenever they're joining the platform. That's the first time they actually get in contact with a financial product, because they need a product, they need a debit card they need a savings account to get paid from Uber. So almost 40% of our drivers drivers and couriers get a financial product the first time they join the platform. So we get to work with a group of people that actually have a lot of financial needs. They're interacting for the first time with financial products, and one of the things we realized about them is that they are completely underserved. Some of them need, of course, they're getting their first savings product. Some of them, most of them don't have access to credit, don't have access to different financial services. So that's why we, as part of the context, that's one of the motivations that we had to start talking to BBVA and actually creating something together. We wanted to bring opportunities to this group of people. And then we can move to the following one for Carlos.
Yeah, thank you, Juan Carlos. Just to tell you a little bit more about the product that we created together, I think it's a very interesting and fruitful partnership for not only for Uber and BBVA, but also for the drivers that are the final recipients of this product. You can see here this co-branded BBVA Uber card. and you will say, yeah, there are many co-branded cards in the market. What is the difference with this one? Here, it is not only, I think that the card is of course a mean of payment for using the funds that you have in your account, but the most important is the experience that we created with the account. And that experience is completely embedded in the Uber's front. We have an open banking platform where we created APIs that we connect with third parties, and in this case with Uber, for providing and for creating not only a product but an experience, a really good experience for drivers. Where if you move to the next slide, please, where the whole experience that we created is in Uber's front. Then you can see here some of the screens that we have with this product. That it will ask you if you already have an account, and if not, with very simple data, you can open an account and the card, and you will receive the card later. And it's a banking account, and it has different features, and we are building others at this moment. You can open the account and you can start looking at your balance there, and you will be able to receive the money that Uber owes you for your trips anytime that you want. You can just press a button and you will receive that in your account. You receive also a loyalty program that is embedded to the product. Then everything is API-fied, and everything is delivered through Uber without the need of going to any other BBVA platform. Then this is what is new in the market, and this is a complete new experience for people, and in this case for Uber drivers and couriers. I don't know, Juan Carlos, if you want to add something.
Yeah, let me quickly add something, Carlos. Thank you, because you said something very interesting. We co-designed this product with BBVA, and that was I think Carlos was touching on very relevant points. We were thinking on our target, basically our target market, which were it's basically our drivers and couriers. They spend most of the day in their car. They spend most of the day driving. That's their primary source of income. So as Carlos was saying, we needed to design a product that was easy for them. And going back to what I said first, a lot of them, they're not very sophisticated, financially speaking. So we needed something easy to get, friendly, fast, convenient. As Carlos was saying, they don't need to go to a branch. They can do this basically driving at a red light. It will take them 3 minutes to open an account or less. Then we're working on different strategies to actually get the card to them. And as Carlos was saying, a lot of the interaction with the app is very friendly and very customized for the needs of this segment. Instant Pay it's an amazing feature, which is basically after every trip they finish, drivers are typically paid weekly. After each trip they finish, now they can get paid instantly. So that increases the cash flow for them also. So we designed this experience together, again, thinking, and BBVA was very flexible, and we worked together with this platform, API platform that they have, to actually deliver something relevant for these drivers. Can we go to the last slide, please? And just on the results, and then I start, and then Carlos, feel free to complement what I'll say. The product has been very well received by our earners, drivers and couriers. Again, both from a quantitative and qualitative perspective, the results are very interesting. From a qualitative perspective, we usually have a lot of roundtables with drivers and couriers, and they always talk really well about the experience, seamless experience, easy to use, easy to get the account. Actually, NPS of the product is very high, more than 90%, closer to 95% of drivers and couriers will recommend this product to another driver or courier of the platform. So they're actually very happy with the experience. And we've seen also, and they think this actually creates, and this is part of why we're doing it also, it differentiates Uber from other platforms. We're the only platform right now in Mexico offering this type of product and benefit to our drivers and couriers. So this is actually creating a differentiator for us in the market. This is increasing loyalty and engagement from our drivers and couriers. We have seen, and for confidentiality reasons, I cannot share the number, but there's a significant increase in supply hours in the time of the time drivers are spending in the platform driving. When we do all the control groups and the people that got the card, and there's a significant increase from people that actually got the card, meaning it's actually working in terms of differentiating our platform against others and increasing engagement from drivers. And I don't know, Carlos, if you want to add anything.
Yes, complementing about the last 2 points, I think it's very important to have a good open banking platform that really gave us really good time to market for launching the product. It was really a record of thinking a big bank working with a tech company like Uber for creating this experience in a record time. That was pretty good. Also, the last one, the win-win-win, I can like summarize all that we have been saying in 3. What we were creating, it's a great new experience for drivers. That's a win for them. Of course, increasing in drivers' loyalty for Uber. That's also really good for Uber, and for us, of course, is creating and empowering a new acquisition channel for BBVA. Then I think everybody is really happy with the product.
Juan Carlos, thank you so much for the insightful chat right now. We have here some questions, and the first one goes for Carlos. Is BBVA got into partnering with Uber? It's not traditional. What drove you to do that, and what is the learning, the good and the bad learning you got out of it? Share it with us. We promise not to share it with anybody else.
Okay. No, I think it's in our view, of course, we have an organic growth. We have our own channels for growing, and that's important, and we will continue investing on that. But we think that also we need to introduce our products, our experiences into third-party channels. There are these digital ecosystems as the one Uber has created that it's very significant, and it's growing maybe double-digit rate. Then if we want to really be part of that growth of these third-party ecosystems, we need to create this type of products and experience to be distributed through those with those partners in creating really amazing experiences for the final client. Then that's the rationale behind doing this kind of products and the reason why we have an open banking platform for doing that. I don't have many bad experiences here to share. I think the relationship with Uber has been very good. We continue building things together, and we learn. They learn how to work with a bank, and we learn how to work with a tech company. Then it's really good insights.
Carlos, you are reading my mind, because the second question we got is to Juan Carlos on a culture match. I can imagine Uber is a very straightforward, though big organization now, but much more straightforward and decision and testing very quickly. Juan Carlos, how did it go to work with a large bank like BBVA from a culture perspective?
I mean, I think it's true, but I think it's true. It is true that Uber, I mean, people need to remember, of course, Uber now is a large publicly traded company. We're basically all over the world, but the company is 10 years old. So you don't get this big in 10 years and this relevant in 10 years if you don't have this culture of exactly as the question said, moving extremely fast. I think it's true. I think there was some friction because, I mean, BBVA is the fastest bank. We check this. Of course, we talk to different players in the market in Mexico. We explore different alternatives. BBVA is I would say the fastest, most innovative bank, but still, as you said, a traditional bank. And I don't say that in a bad way. It's just that the culture is different. Of course, they have they have committees. They are a regulated entity. That's very interesting. And we needed to learn that we wanted things fast, but they are regulated and they need to be compliant with regulations. So a lot of things took faster than expected, not because BBVA didn't want to move faster. It's just because they need to be compliant. They need to go through committees. They need to be compliant with the CNBV, which is a regulator in Mexico. So I think it was also a learning from us that we know we want to move faster, and we know BBVA tries as much as they can, but they also have limitations, more than cultural limitations, I would say regulatory limitations. And we're learning together about that.
It is usually one of the toughest challenge for the corporate is the regulation. My last question would be for you, Carlos. And BBVA has been the pioneer as a large bank to get into open innovation. You have several initiatives that you are driving very well around the world. As such, probably you got prepared to this kind of crisis. In current crisis, what are some initiatives anywhere in the world that BBVA has put in place like this on the spot to be able to cater to the customers in their non-face-to-face journey?
Yeah, I think it's a very relevant question this time. I think we have invested a lot of money in digitization of all our services, and not only services, also servicing for our clients. And maybe in the past, some people were saying that we were maybe investing too much in some things, but now with this COVID crisis, it is very evident that all the investments that we have been doing for digitizing our operation, it's very important. You mentioned that also in the back office maybe there are some banks that are not prepared. They have invested more in the front. I can tell you that in 1 week we have 95% of central headquarters employees around the world working remotely, and that's important for at this time. It was also a record time for doing that. And we are fully operational, and we have different products that we are launching now also to support our clients, SMEs, and individuals in this crisis. We also have some investments in some startups in the ecosystem. For example, we bought a payment company in Mexico that is called OpenPay, that now is delivering a product for collecting payments from clients, for SMEs, that we are launching these days for trying to alleviate some of the pains that they will have. Then I can say that all the investments in technology and digitalization that we have done now, they start to give us a real differentiator in the market.
Okay, well, Juan Carlos and Carlos, muchas gracias. It was really great. I suggest we now jump to the next slot, and this is for Colin Payne. So Colin is Vice President and Global Head of Next Gen Banking at Capgemini Invent. Colin, the floor is yours.
Thank you, Philip. Thank you. Can I have the first slide, please? It's a great pleasure to be speaking to you all. Difficult conditions, but we know we are being disrupted. And of course, previously on reports that we've had through Capgemini, we've spoken to banks and fintechs, and they have a very strong view of the disruption areas which are specifically causing them most concern. And you see those on the screen. And this plays to the obvious, that customer expectations have changed rapidly. And this has been the encouragement to many fintechs who have come in and offered real value to customers. And of course, the banks now respect that. And as Elias outlined in the findings we've had of the report, now is the time to collaborate at scale. So if you could do the next slide for me. We've obviously spoken a bit about COVID, and this has overlaid everything. So from our position now, it hasn't obscured the issues around disruption, but we would say from Capgemini's point of view, it has highly accelerated the need to respond and change to meet those changes, especially for customer and around the regulation. So if you could go to the next slide. Thank you. From a Capgemini point of view, since the last report, number 3, this time last year, we've launched a system called Inventive Banking into the market. We launched it at Sibos last year. It's a part of a new strategic offer that we bring into the market. And the reason we've launched something is to be extremely tangible, concrete, and very practical, working with our clients to deliver something that actually addresses some of the challenges we've picked up. Often we see research that comes out, and it's absolutely correct that we should be looking and listening to the market. But it's important for us to respond with something extremely practical, which can help you, which can help our clients, and we can help the fintechs work with the banks. So we've created a very solid platform. Our belief is that the banking environment is clearly developing and evolving into a more platform-based business, allowing those who adopt platform architecture, and by that I mean a very lean, plug-and-play, collaborative architecture. It allows them to then collaborate more effectively with partners. And this is the critical thing. We've created a platform, and then we've created an environment where our ecosystem of partners can scale into our systems, and we can work with our clients and the banks to allow them to operate together more effectively. Part of this is to help us try to help this scaling of the fintech collaboration, because we've recognized, and we've spoken to many of our clients and many fintechs, we recognize it is a challenge, 2 very, very separate cultures. So the idea here with Inventive Banking is to allow us to work with the market, to bring 2 sides together, to really pre-integrate and then bring those to market. The idea is to bring down onboarding times, to make management of relationships easier, and ultimately deliver value out to those customers who really need it. And the point is, I mean, Inventive Banking itself is about growth. But what's been interesting in the last few weeks as we've started to grapple with a COVID world, of course, this applies perfectly to those other issues around cost saving, around revenue, and around customer retention, stickiness, net promotion score. So when we talk about realization, we're now utilizing our platform and the ecosystem to realize those key tasks that banks are now having to look at in real detail. How can we work with fintechs to bring down cost? How can we bring fintechs in to work with you and to accelerate customer need responses? Now, whether that be responses to a loan requirement, Elias used a very personal example of a mortgage, and we've heard huge horror stories in the last 4 or 5 weeks of loan applications, mortgage blocks. These things are happening. How can we help unblock those in a really fast, efficient way that can be scaled out to every customer that our clients have? And this is the purpose behind Inventive Banking. And the important thing was, we went to build this rather than us simply present this as an idea. We've actually got under the hood. We've started working with architecture, working with our technology partners, and with our fintech ecosystem to provide real use cases out to our clients. So if you could switch to the next slide, please. What we try to do, and this has got a lot of text on the screen, so I'll just do the high level for this. The way we approach any problem, we focus on the vision and the problem which is needed to be solved. And what we use real-time modeling to look at the customer journeys, to look at the colleague journeys, to identify the strategies and tactical opportunities that we can now create a return on investment. And we're very, very mindful that our clients are under enormous pressure now to only look at prioritization around the current crisis. But as we move through that, so as long as we reflect on that crisis and the need there, we still see the growth opportunities in the future. So what we're trying to do is work with our clients to create a clear vision, to focus on the short term, but also build the foundations for the medium and longer term. And we do that by bringing together business and technology. And we know this is the right way to move. It's something that's been difficult in the past. And the fintech community has really shone a light on how to create technology solutions that align to the business and customer need. I mean, arguably, some of the greatest customer experiences of the last 2 to 3 years, 4 years, 5 years have come from the fintech community. And we're learning so much by working with them. But for me, the ability to then collaborate with the best of the fintech community and then identify the real business solution along with the technology enablement. That will deliver you an impact. And again, our focus is now on the tangible. No longer is it a case of launching a proposition, launching a greenfield, and hoping for the best in a business case. No, we are now very, very focused on these clear, tangible, measurable, and defined impacts, whether that be cost savings, speed to market, an increase in revenue, and of course, improved loyalty, stickiness, and net promotion from your customers. These are really critical impacts that serve to then allow you to deliver on that vision. So inventive banking comes together, and this is our response to the findings we've had over the last 2 years. Our response hasn't changed. We're concerned with the front end, but Elias pointed out the middle and the back office, the end-to-end story is really what counts now going forward, and we have to address that. No longer it's the domain of doing a really beautiful front end digital experience. No, we have to plumb right back through the organization. We have to understand the connection through the legacy. We have to optimize APIs, and we have to then look at the best way to use open banking and OpenX to open up opportunities in the future for the customers. If you could move on to the next slide, please. Thank you. The way we do this, of course, for us, we believe we bring together a unique set of services. It's very end-to-end. We have a strategic unit which moves from Fahrenheit 212 and IDEAN through the business, through Capgemini, and delivers out Capgemini value. So we bring to market the end-to-end story, the ability to create a viable vision, build a full business case, and then deliver out value to the customer in a practical sense into production. So that's in a nutshell our story. I'm going to pause there and I'm going to pass to Philippe, who will take forward.
Thank you so much, Colin. And we have a lot of questions because looking at the what you call the the working at scale and getting to the inventive banking, I'd like us to look a bit at the obstacles that we see there at banks, because it didn't move as quick as we would have thought in the last years. One of the obstacles often named, and I got a few questions on those, is about regulation. How what do you think about the way banks look at regulation, especially when working with the small players, let's say?
I mean, the regulator themselves, so if we're talking linked to the European or US regulator, they're open to those discussions. There's no question that the regulator, if the opportunity is brought to them in the right way, and I've had a lot of experience bringing new propositions into regulators, then they're open. What we actually find is a lot of the internal governance is the issue within some of the incumbent banks. So it's not so much a case of regulation as more compliance and internal risk. And what we do with that situation is from the very beginning, work with those areas. We work with risk, we work with finance, we work with legal. We encourage them to be part of any piloting, any proof of concept. We love to get them involved right from the beginning. So that is the way, I think, to manage that.
Yeah, makes sense. And by the way, I want to tell you, we had a webinar at Efma where we looked at quick wins during the crisis, especially for digital channels. And some banks named that they were negotiating on a regulation point of view in the country to make things easier and smoother. Example, some contracts to be digitally easier than usually because there's no branch to get them for the moment.
Absolutely.
My second and last question would be about another obstacle, which is simply with this crisis, is there a fear that some fintech might be at danger, at risk, simply financially, and make banks maybe less eager to work with?
It's a really interesting question. I mean, I think some of the fintechs obviously are SMEs, so they are going to have to weather this storm in very difficult conditions. Other fintechs, of course, are unicorns, and they are perfectly well established. What we do in Capgemini, we create a qualification which we put some of our scale-up fintechs through, which is the scale-up. And when we go through that process, it's a sort of soft due diligence process from our point of view. So we do as much as we can to ensure that the fintechs we're working with, anyone we bring to a client, has a strength both in their balance sheet, but also in their management and in their product. So I think you have to do the due diligence. I think you have to be prepared. I think you have to work that risk into your architecture. Capgemini has always been an advocate of plug and play, loosely coupled architecture. So we have to obviously bear in mind that can happen. You manage the risk like any other risk in any program.
Yeah, okay, makes sense. Well, Colin, a round of virtual applause for you. Thank you so much. And I now to jump to the next slot, Sudhir Pai, also Capgemini Executive Vice President, Chief Technology and Innovation Officer. And Sudhir, the floor is yours for new business model innovation.
Thank you so much, and hello everyone. It's indeed a pleasure to join today's webcast, and what a fascinating sessions we had from BBVA, Uber, along with our report out from Elias and Colin. Uh, so let me start, if you move to the next slide, on mainly couple of topics. The first and foremost, building on the theme of COVID and post-COVID, what are some of the global perspectives from banks around the world doing at this stage? Then I will bit more get into the details of what does it mean from 4 key focus areas that I would recommend the fintechs to look out for opportunities. And then finally, I'll dwell a bit more detail on so-called the unconventional ecosystems that are emerging and what does it mean to the fintech world. So I think we already heard a fair bit of COVID situation and its impact on so-called the frictionless, contactless experience and the heavy demand on channels. Today, when I interact with banks and insurers around the world, there are 3 areas that that typically a journey has started. So the first and foremost is here and now, which is the operational resilience. And operational resilience is very important. There's several workarounds today are in place, including workforce measures, ways of working, remote engagement, and as you know, there are a number of startups who have been quite active in this space. So it's not just about work from home and having some tool sets. It's also about looking for additional health and well-being measures, looking for conformance tool sets, looking for different types of culture that you need to generate and build. So from infrastructure all the way up to people, there is heavy focus today around operational resilience. And whilst most of the banks have taken it up on a priority, I'm sure over the days to come, there's more to do in this space. Then the second element is, we called it as business as unusual. And here is where, as you can see, banks are under pressure for next few months in terms of channels, which you already heard, but also in terms of, disbursing and supporting the community, right? So supporting community for financially, be it through a waiver process, be it through a tax process, be it through, small to medium business lending. If it is insurance, it's around travel, the issue of related to travel insurance or claims process around the things that have not happened, etc. So where I'm coming from, this is there is a huge demand into this space, where banks not only have to act on behalf of government's initiatives, but also have to take care of well-being of citizens and communities. So that's the role that is emerging. And again, there are some unique opportunities for the fintechs in this space. The third one is very interesting, which is preparing for the future. And this is where the conversations have just begun to say, hey, look, whilst we have all these things in place, what are going to be our scenarios of business over the next 3, 6, 12 months? And the scenarios have to cater to some of the new normal situations, right? So are we ready for that? Now, I would think this is going to this is at the back of mind pretty much for all the organizations. However, whoever takes the lead first will probably have better advantage when it comes to productivity, when it comes to time to market, and also overall cost containment, right? So all three are both going to take precedence, and the reason I'm highlighting this is that this is it's not mutually exclusive, and I would primarily see opportunities to play a balancing act between resilience and preparation for the future. Next slide, please. So if I put this in perspective, there are four key areas where probably fintechs have opportunities, and banks will continue to invest post-COVID situation. Of course, on the agility, which is as one would expect, that a number of banks and insurers have gone through agility journey, and it will continue to go. What does this mean? This doesn't just mean agile projects. This means ability to act faster and to compete against big techs, or to be part of big techs type culture within the organization. Trust is going to come at the forefront, with so much of current situation demanding more of consent management, data security, data anonymization, and other requirements. On the back of it, immediately there will be additional regulations. As you know, EU recently published on the additional regulations, strengthening further the needs for GDPR and so on and so forth. So trust is going to be paramount. So that will continue in its way. And the last two, which I called out, is even more important. If you look at the projections for banks in medium to long term, they are all going to have a huge transformation initiatives around costs. Given the current interest rate scenario, given the current situation that the banks are going through, there will be cost transformation scenarios, and I think these cost transformation scenarios will lead to unique opportunities for fintechs, either through automation or through data driven artificial intelligence, etc. So I think one has to look out for such opportunities as well. The last but not the least, which is my next slide, is unlocking ecosystem. So the evolution of ecosystem is going on for a few years, right? So it's no longer definitely no longer one-to-one. We heard from BBVA and Uber, right? So we normally look at this as either a process-centric ecosystem that you're trying to address a certain process by engaging fintechs and big techs, so such as claims transformation. It can be customer-centric ecosystem. As an example, an insurer starting, I gave an example of Ping An there. A Good Doctor is the network of doctors and healthcare platform run by an insurer. Or if you look at business-centric ecosystem, right? So we have a couple of examples from Capgemini there, Goldman Sachs, Apple, I think a couple of years back, ING, AXA. So these are the type of business-centric development of exchange of opportunities and creating new value for consumers. And the last one is also becoming extremely important, which is society-centric. That means the ecosystem in future will not only just be from organizational stakeholder benefit, but it is also broader society or sustainability benefit oriented, right? So I took an example of BBVA there because when I saw them in Singapore FinTech Festival, for example, last year, I saw how nicely the organization is aligned to the SDG parameters and trying to address some of the sustainability measure, right? Be it climate, be it poverty, be it inclusion. So ecosystem is going to go beyond just a business or an organization need. So to conclude, I think for fintechs, the opportunities are opening up, be it in the operational resilience space for the current situation. Simple examples are things like more startups are now coming into facial recognition, data anonymization solution, remote identification solutions, etc. But mid to long term, there are even more opportunities around ecosystem. So I'll pause there and I'll open for some questions. Thank you.
Thank you so much, Sudhir, and again, virtual applause. We're getting to the end, so I'll take one question we got, and this is the following. I'm always wondering, when I look at innovation, collective and collaborative innovations between bank and fintech, how much is the reason out of the customer experience improvement and how much on the cost savings improvement? Do you think the crisis is going to let this change? And if we talk about cost, how could fintech, leverage on this?
It's a good question, and I do believe that the post-COVID will have a large weightage, a huge weightage around cost transformation for financial institutions, and I do believe fintechs will play a major role. And this could be in the area of straight through processing, automation, artificial intelligence led opportunities, business process optimization opportunities. I think it's given that some of these will resonate well, and it nicely fits into the FinTech report observations of not just focusing only on front end, but also getting the middle and back office streamlined, right? So that's where I would see the opportunity for cost optimization.
Okay, thank you so much, Sudhir. So I think, Elias, before giving you the word, we're getting to the end. I'd just like to remind that, again, together, Capgemini and Efma, we're doing the New Tech Challenge, which will feature a number of winners in different categories of fintech and also couples bank plus fintech. And please note in your diary that this will be held on the 28th of May at 2 p.m. CET, but you'll get news from us soon. So Elias, the final word for you.
Thank you, Philippe, and thank you, Carlos and Juan Carlos, for joining us from Mexico, and Sudhir for joining us from Melbourne, as well as Colin and everybody. I just want to give you here the site, fintechworldreport.com. Today, we gave you a very fast overview about it. We really appreciate your time for the last hour. Please go on the website, download the report, and feel free to reach out to us for many more questions. Thank you so much. Stay safe and see you anytime soon face to face. Bye-bye.
Bye. Bye-bye.
Thank you. Bye.
Thank you.